Hi, Larry Berman here, and here's what's on my radar this week. It's clearly all about the Fed for the next couple of months, inflation expectations, and what is the weakening economy. When you look at some of the faster moving data, we've seen a significant downturn, obviously Delta related. The Fed has recognized this. When we look at the longer term data and expectations thereof, and the city economic surprise index, you can see both falling off a cliff in Europe and in the US. You know, you're looking there at 70% of the world GDP. So, you know, the global economy is underperforming here. At the same time, we have inflation expectations, as Powell says, well anchored in long-term expectations. Couple graphics here we're looking at is the five-year inflation swap. So this is saying, what are inflation expectations looking forward 5 years from today? And that's clearly well contained. If this starts breaking up over 2.6, 2.7%, heading towards 3%, we've got a problem, and the Fed needs to be much more proactive. Markets are not ready for that. Compared to the personal consumption expenditure deflator as part of the GDP, and what that's doing at the core right now, which is straight to the moon. So we've got this imbalance of current inflation versus still very well contained future inflation. If that pattern breaks, this has got to be key for people looking out 2, 3, 4, 5, 6 months, and for the Fed. All eyes need to be in this area. How do you play it right now? You play the long side of short-term inflation, and that is commodity related. So oil, base metals, you name it. In that terms, gold, silver started moving today off the weaker employment reports in the US. Against being short the broad market, right? So long short trade, pair trade of the week. Have a great week, everyone.